Welcome to Divorce Mortgage Strategies, brought to you by the Divorce Lending Association, where clarity meets strategy in the financial side of divorce. Whether you're a family law professional, a financial expert, or someone navigating the complexities of divorce yourself, this podcast is your go-to resource for trusted insight into how real property and mortgage financing intersect with divorce outcomes. We don't just talk about houses. We talk about strategic solutions that protect futures. Let's dive in. Today, we welcome host, certified divorce lending professional Cindy Scobee, and her guest, certified financial planner Mark Bergeron.
Hello, I am Cindy Scobee, a certified divorce lending professional, and I am a contributing host today for the Divorce Lending Association's podcast. And today I am interviewing Mark Bergeron, a certified financial planner with WLFB Inc. in Bellevue, Washington. And Mark, I want to welcome you. And my first question is, how did we meet?
We met, the perfect way to meet as far as an introduction by a collateral professional. I had the children, I shouldn't call them children, they're in their 20s, but very mature 20s, of an existing client come to me saying, Mom and Dad said we should get our act together, and I'd like you to take a look at where we're at and what we ought to be doing. And I asked them for data, and I was blown away on how organized the data was, and for their age, how well they had done financially as far as accumulating assets. And they said, what do you suppose we should do? And I said, well, we need some estate planning done. There's nobody owns enough life insurance. One of you does not own disability income, and you need to own a home. And that's always one of those situations where one of them says, oh dear, and the other one goes, thank you, Jesus. So they said, where do we go next? I said, you go to my realtor. Yeah, my favorite to-go realtor. And that's where I sent her. I sent them. That's also one of your favorite realtors. And she came to you, and I looked at your credentials, and I said, I'm shopping for a new real estate mortgage broker. I need to meet this woman. And away we went.
That's right. I love it. Yeah, that's the best way, right? Where we're actually in a transaction together and seeing the work and all of that. So just to start, could you share a little bit about yourself and your practice?
Yeah, our motto is you've never heard of us, and we're fine with that. We're a boutique investment advisor and financial planning shop. We're a family-owned business, two families, three of us actively in the business. And I do the planning. My wife is pretty much the chancellor of the exchequer as far as all the internal finances. My son's really the utility infielder, the IT guy, the customer service guy. We've been in business at WLFB since about 2014. Before that, I was with numerous other investment advisory businesses. I've been in this business for 40 years, and before that, I spent 5 years in the insurance business, where our clients are executives, professionals, retirees, and business owners. They typically have ourselves and a group of collateral professionals like yourself. If they don't have, we find them for them. We do not manage money. We refer money out, to third-party money managers, and then as allowed by the Department of Financial Institutions, we split the fee with them. So we tell the clients they basically get 2 for 1. They get full-time professional money management, and I can do planning, which I prefer to do.
I love that. So, as you know, I work a lot with divorcing clients, and this is obviously for the Divorce Lending Association. So every divorce is unique, and each person goes through their own journey. If from your experience, if there's anything that you could change about the process or offer one piece of advice to someone just starting in a divorce, what would that be?
The person sitting across the table from you is not your enemy unless you make them so. And that's where you start. We also, in this practice, we work with the transitioning of dental practices. My son does it, and it's relevant because he typically works with both buyer and seller. and as dual representation. When you're doing that, you have to look at both doctors and draw a line and go, your toes may come up to this line, but if they go over that line, you're going to have a problem. And so that's, the approach you try and take with a divorcing couple. And it's hard because you don't have the internal emotions that they've got right now causing the divorce. So,
Yeah, no.
but that's the way you try and approach it. And you're also hoping that the divorce attorneys that they're hiring are going to take the same tact.
Yeah, and I've seen, when clients work together and are collaborative from you know, just trying to work together, not be adversarial, is we see things move much smoother. No one really wins in divorce. It's not like one party's going to win over the other, at least from what I've seen. So if people can kind of support and meet each other and not take these very stringent stances in the process, I tend to see things go more smoothly. So I agree with what you're saying. And that also brings up like the team of people that are in the space supporting the folks going through divorce. When you're selecting a certified financial planner for support, specifically to divorce, what should somebody be looking for?
Well, that said, there are planners that do nothing but work in the divorce arena. A certificate is issued, a certified divorce financial planner. I've never looked at the program, but it sounds kind of interesting. If there are clients, and this is happening, obviously we're involved with both clients. We're going to have to determine whether or not we're going to continue to stay involved with both clients and what type of conflict of interest we might have. When the cone of silence drops down over everything peculiar nature to the other party. If it's a situation where we're brought in by an accountant or an attorney, we're going to look around and see who all the other players are, and hopefully they're team players, because you will be looking at documents created by the divorce attorneys as they go back and forth, then looking at the tax situation for what it looks like now and what it's going to look like in the future. A lot of it depends on what they're fighting over, or what you see out there as far as what the balance sheet looks like and the composition and the complexity of those assets. So it's always you're the first person I've ever found that does what you do. So you were an interesting addition to our quiver, if you will. Because there's always the home. A lot of times there's a mortgage, and then what are you going to do with it? And to be able to offload that to a professional is wonderful. We're always involved with on a core basis with the accountant and the attorney until we dig down deeper and see exactly what else we need to look at. But we're pretty much the ones that are going to handle, asking for documents like employee benefits and retirement plans, and potential inheritances that both spouses know about and how they're treated, under the guidance, because the attorney's usually going to drive the bus.
And do you have any memorable cases that you've ever worked on? And if so, what would you say stood out to you if that applies?
Well, those most memorable are those where they might have done the most, income tax damage to themselves. If you happen to get a situation to where investment accounts they're looking at liquidating investment accounts, that's fine, just to split them up until you raise your hand and go, okay, I took a look at these accounts. I took a look at not only the account value, but I took a look at your cost basis. And there's 7 figures of capital gains taxes that are going to be paid if you do it this way. And they look at you like, oh dear, what's plan B? Well, plan B is code section 1041 that says when you divide property in a divorce, the basis goes along with it. And then they go, okay, we get it. We're not going to liquidate them. We're going to split them, and let each spouse go on their own. I have seen very generous maintenance payments for a longer period of time than they would have to do statutorily. So those people were very much ladies and gentlemen as they parted company and went their own way. So knowing taxes helps a lot.
It does. It does. I actually heard about a case just recently that was at trial that once the wife wanted to keep the house, and then once she realized the capital gains ramifications that she was going to be exposed to, she switched all of a sudden in the middle of trial and said, wait a second. And the CDLP was the one that brought that to their attention. So these are things that, I mean, attorneys wouldn't necessarily know this, and why it's so important for other professionals to be involved to help guide our clients that are in this space. How do you help clients feel more confident when structuring their finances post-divorce?
Well, first of all, they've got to know enough about their finances currently. And so you've got to figure out what type of financial arrangements you've got with the clients and who runs the money in the household. The classic case I had, and this was not referred to on divorce, but brought in by the tax attorney saying they need some planning. And I originally talked to him and he said, you need to talk to my wife. And I said, that's great. And she said, okay, here's the deal. If something happened to me, he could find his car keys in his golf bag, and that would be it. And so I go, okay, I get it. She said, I need one source on the face of the earth that understands where everything is, and so does he. And so if and she said, I don't plan to have you teach him everything I know about, running the household and all the finances. She said, he's a great husband, he's a good doctor, he's a good provider, but this is just how we've done things and it works for us. She said, but it would be a mess if something happened to me. But if you get a household that's more peculiar in nature where you have young tech people, astute financially, in many instances, they were used to running their own finances before they formed a household. And so you got them both better up to speed on what the other one is doing. Unless they're so busy running a household, chasing children or whatever, that they haven't taken a good look at what the other one's 401k looks like, or whether or not they've got a defined benefit pension plan, or what are these RSU things that are sitting out there. So, a planner in the middle, or a planner in the middle with a good group of collateral professionals they can go to. A very astute client surgeon of mine, looked at me and he said, I'm going to acquaint you to medicine as far as what you do. You think, oh dear, they're going to call me a financial proctologist. But he looked at me and he said, you're a GP. I said, really? He said, yeah, because when I hurt, the first place I go is to my general practitioner. If they can fix me, they do. If not, they send me out to these specialists. He says, you've got all these specialists out there and you kind of know where to send me. So that was a really nice compliment.
Yeah, for sure.
And a great analysis that I've continued to use.
Yeah, no, it's true. I think it's so important in this space that, other professionals that can really help guide our clients. And the part I remember you shared with me, and you were one of the first people that talked it to me about this, was insurance and, the whole support payments. And if in the event that somebody was to pass who was obligated to pay support, how we don't see a lot of insurance policies that are being put in place to support that support if the person was to pass away. So could you touch on that a little bit?
Yeah, I mean, three things can happen to you. You can live long and prosper, you can die, or you can get sick. Think about it, that's all. When you've got a situation to where one party is going to be depending on the financial resources of the other party, then you've got to figure out what the net present value, what those payments might be, and how long they're going to go for. And you at least ought to have a term life insurance policy for that amount. And if you've got insurable people, that's, insurance companies don't have to hand you an insurance policy if you've got issues. If you look at the example of your average tech person in their 30s or their 40s, morbidity is the bigger problem than mortality. Disability. You're alive, your income's dead, and all you've got to do is work with somebody that's facing this, and you realize the stress it's caused. So you go back in and you go, I want to see if he's paying her, I want to see what his group disability policy looks like and what the limits are, and if they're not high enough, you go back to the attorney and go, look, in all fairness to my client, if I'm working with the person receiving the payments, the disability income that would be provided by the company, which is taxable if the company paid the premiums, is inadequate. So somebody needs to lobby for the payee to increase their disability income. On the same side of it, they're going to form two households and they're going to have two stations of liability. And so that's the classic case where I look at the client and go, how much can I sue you for? The client looks at me sideways, go, I don't understand. I said, if I fall down those stairs, then all of a sudden I'm a paraplegic, what's the limit of your property and casualty insurance? And I'm usually on a quest to get an umbrella put in there. I'm on a quest to have that umbrella be $2, $3, $5 million. It's not that expensive. So we're talking about that. If you get a couple and they are divorcing in their 50s and later, and all of a sudden there's not a spouse at home, you're giving the long-term care insurance lecture, which nobody wants to listen to, thinking it'll happen to the other person. But 2 out of 3 people over age 65 need some type of care. So, basically what you're doing is going, oh, the kids will take care of me. So anyway, so those are the core: life, disability, property and casualty, and long-term care insurance is where I start flapping my wings.
Right. No, I mean it's brilliant because so in my world, I see clients staying on the mortgage and on title post-divorce, which I like the fact that they're on title for several lending reasons. It's beneficial. Yet do they have protections in place? Like you said, somebody falls down the stairs, paraplegic, they're going to potentially sue anybody that's, owns the home or is on the mortgage. So we have to look further than just what's in front of us, which is you get the house and I get the house, you don't, or whatever. There's all these other aspects that we're trained to at least bring to the attention of the professional team and our clients. Um, so, Mark, what red flags should professionals be aware of when it comes to asset division?
Hiding assets. Okay. You hope
Mm-hmm.
I've never had to deal with it. You hope you don't have to deal with it. But it's really easy, if you're looking at a tax return and all of a sudden there's a distribution or a dividend or a capital gain, from something where you know what it is and you don't see it on the disclosed balance sheet.
Mm-hmm.
So that's like I said, I've never had to deal with it, but always looking.
Yeah, absolutely. And I just did a podcast with a forensic accountant that helps to find money too. And then, besides obviously someone like myself, what other professionals do you usually bring in during a divorce?
Well, first of all, I want to see who they're working with. I want to know what their legal documents look like. Are we doing will planning or are we planning under a revocable living trust? Because all of us are going to have to be redone,
Yep.
so then you're going to, and, I prefer a tax attorney. If I have my choice, I like the credentials LLM after the attorney, which means a master's in taxation.
Mm-hmm.
I prefer boutique firms, where you don't walk in and see, 12 floors, think, oh my God, what's this going to cost? Not that you should get legal work for free. We know here we have to have contacts with law firms on the east side and downtown because nobody will cross the bridge.
Mm-hmm.
And prefer boutique accounting firms where we can bond with and get to know the CPA we're working with because I can call in favors. Especially when you're taking business, they're always going to take your call. They're always going to go, what do you got? And I'm going,
Mm-hmm.
I think I know the answer to this, but complete the sentence, will you? And they do.
Yeah.
And so I'm a big believer in accountants and attorneys, obviously, just like I am realtors and people that do what you do. Like I said, I've got a consultant that sells exotic cars. And when a client calls and says, I've got a nephew, his mom died, he's stressed, he's got a 64 Jaguar XKE. It looks like it belongs at Barrett Jackson, but he doesn't want it. I got a hold of my car consultant at Rumble Auto. He had the car sold in Canada, and I forget how long. Boy, did I get patted on the back. But
Yeah.
just to have the network of people we've got is really a blessing.
Yeah.
Because that's the only way you can operate. Like I said, there are only 3 of us and 2 small Shih Tzus in this practice, and that's about it. So that's the only way we can do it on the planning side, knowing that the 2 money management shops are going to do their job.
No, that was one thing that was super impressive to me is how important it was for you to have a very abundant of professionals in your Rolodex with, like you said, I didn't know you did that this even existed, and therefore I need to understand this more, right? The work that I do, because there's very few of us.
Yeah, I
So,
hadn't a clue, but I
mhm,
do now.
you do now, and you've got me on your speed dial, hopefully.
I do now.
Yeah. So as you approach support design in a way that, satisfies stability and continuance requirements while staying within your role and not giving legal advice, how do you really do that? Like, how do you stay in your lane when you're advising, when you're going through something like a divorce, where obviously there's attorneys and such?
You mean when you're dividing the financial kitty
Just
as
how
far
do
as
you
what it's going to
stay?
take to support two households?
Yeah, just kind of how do you stay in your lane when you're walking through this with attorneys? And I think it's really easy for us to also think about, like, n stepping in a little bit to, their side of things, because we know so much and they may not know. So do you have a way that you kind of work to make sure that you stay in your lane as you're working through a divorce?
Well, it's easy to look at what the burn rate is now and what the burn rate is going to be divided by two plus.
Mm-hmm.
When you add another household, to go back to the party you're working with, or if it's both parties going, okay, this is what it's going to take, especially if one party's paying, or if one party has an income that's larger than the other as far as what it's going to be. We never step into the maintenance arena. That's a function of the courts to what they're going to award. Most concerned about the fact that one party's got a 401k, which is a defined contribution plan. The other one has a 401k and a defined benefit pension plan. They work for Boeing. And a defined benefit pension plan says we're going to pay you X% of your salary, down the road when you leave. Well, the other spouse has earned a portion, a community, a portion of that benefit. So what's the net present value of what they've earned, and how do you trade that off?
Mm-hmm.
With what's going to be in the other retirement plan. What do you do with restricted stock units? That's when it gets really technical, and what you can and what you can't do with those, because that's pretty much the way you award equity compensation in companies like Microsoft. And so you have to look at a slate of those, and so does the forensic accountant. And the law firm, hopefully, in this area should be versed in the fact that that's what equity compensation looks like. And it's so much simpler than it used to be when we had non-qualified options and things called ISOs and stuff like that that got really complicated. But just a good look at who owns what and who can own what. And
Mm-hmm.
yeah, you can divide the house a lot easier than you can divide an RSU, but it still belongs in theory to the community. Or did you
Mm-hmm.
come into this marriage with property? And if you came into this marriage and it says the souls and the separate property of a married person in a community property state, you've got a much better chance of keeping your separate property than if you commingled it with the community.
Totally. Well, Mark, I want to say I really appreciate you sharing your valuable time with me today. And I really respect you as an incredible professional in the greater Seattle area, the East Side. Your experience is so vast, and I just so enjoy listening to you and going deep in your knowledge. I wanted to ask, where could somebody who might benefit from your experience go to learn more about you?
We do have a website. We don't have a huge presence. It's www.wlfbinc.com, and that has the basics. We do not, solicit, if you will. We work by referrals only. They'll come from a client or a collateral professional.
Hmm.
And but we always offer, regardless of who you are, we're going to sit down and offer an initial consultation to see exactly where you're at and how we can help, and if we're a fit.
Yeah, that's huge. If you're a fit, I feel the same way. Is that's so key. And then, do you have one final thought that you would like to leave us with today?
It's always better to have a team, because all I'm always asking, what am I missing? And I love it when somebody raises their hand and says, well, you missed this. Good. I'll remember to do that next time.
Yeah, no, I appreciate that very much. And I feel the same way as having a really good team behind our clients. And I feel like that's really helped clients really figure out how to settle best because they get really optimal knowledge and education from various experts. So, well, thank you again for today. I'm super grateful that you said yes to doing this podcast. And I look forward to seeing you, I'm sure, soon.
Thanks for joining us on Divorce Mortgage Strategies, powered by the Divorce Lending Association. If today's conversation brought you clarity, insight, or inspiration, we encourage you to subscribe and share this episode with others in your circle. For more resources, or to connect with a certified divorce lending professional in your area, visit divorcelendingassociation.com. And be sure to download the free Divorce Strategy Hub mobile app for tools, education, and support designed to guide you through the financial side of divorce. Until next time, remember, in divorce, the mortgage isn't the problem, it's the plan.